Well, business leaders from around the world are meeting in Davos, Switzerland for this year's World Economic Forum, and Yahoo Finance's Julia LaRoche sat down with Brian Deese, BlackRock's global head of sustainable investing, and he explains why climate risk is investment risk. Take a listen.
We're joined by Brian Deese, the global head of sustainable investing at BlackRock. Brian, thank you so much for joining us.
Happy to be here.
All right, well, sustainability, specifically environmental sustainability, is just such a huge topic here at the World Economic Forum. I just want to back up a bit and get your take on how you define sustainable investing.
Absolutely. And it's the right place to start because there's a lot of confusion in this space. So we define sustainable investing as combining the best of traditional investing with insights about the environment, about society, about governance, in order to generate a better long-term outcome for our clients. And so it really is about taking the best of what we know about investing and improving on it by better understanding these recent trends.
And how do you approach the understanding of some of these recent trends? Walk us through how that works.
Sure. So we take the issue of climate change. Our research and the work we've done really reinforces to us that climate risk is investment risk, like any other area of understanding investing. And so it's about measuring those risks, whether they are the physical risks of increasing wildfires or storms and how those will manifest themselves in the value of companies or the value of assets, but also the transition risks. As the world transitions to a low-carbon economy, it creates incredible opportunity for companies that are pioneering carbon-efficient technologies, but also threats for companies that are reliant on traditional fossil-based production. And so it's really understanding those risks, better measuring them, and then integrating them into the investments we make.
Well, BlackRock CEO Larry Fink, he sent out his widely read letter talking about how climate change is going to be at the center of BlackRock's investment thesis going forward. I guess, he always sets the tone for CEOs and how they should be thinking about different issues, but do you think that people are just discounting the magnitude of what climate change could mean for business, how it could, be detrimental to the economy?
Yes, and the principal message from Larry's letter this year and our message is that we are on the verge of a fundamental reshaping of finance. We're going to see a massive reallocation of capital, and that most financial models and most financial market participants are not fully grasping the magnitude of these changes.
I want to also understand how BlackRock is going to lead the way here, because you all do a lot of passive investing. How do you kind of take that role and create that sea change? Do you need to be more active, or I'm curious how this would work?
Absolutely. And one of the things we did this year was, in addition to Larry's letter, we put out a letter to all of our clients saying, here are the things BlackRock's going to do. So first, in our actively managed portfolios, about $1.8 trillion where we have discretion, we're integrating these risks, and it will affect the positions that we take. For example, we've made a commitment to exit thermal coal from our active positions. Second, with respect to the index investments we provide, we've made a commitment to provide sustainable versions of all of our flagship indices so that we can offer investors choice and encourage them to look at the sustainable versions, because it's our perspective that those sustainable versions are likely to do better, if not the same, across time.
It certainly seems like we are in a moment in time. I mean, we're hearing not just BlackRock, but other companies coming out, wanting to be carbon neutral. What do you think is making this such a viral moment right now? It seems like climate change is just front and center. Why do you think it's gone viral?
Well, the first is the science and the increasing salience of these physical risks, whether it's the wildfires in Australia or in the west of California, or the incidents of flooding that we're seeing around the world affecting farmers and crop yields. These physical risks are becoming increasingly salient. And the second is, I think, the reaction to society's unhappiness with the way governments and companies are responding. And so the populist movements and the student-led movements that we're seeing are, society has different expectations of how companies operate and how governments operate. And that's part of why we, as investors, believe that we're on the front end of a big reallocation of capital, because ultimately those expectations will be manifested in capital allocation decisions in the future.
And what do you think will be the biggest challenge going forward?
The biggest challenge is whether the financial industry and the models that we use can keep up with the rapid pace of change.
Brian Deese, Global Head of Sustainable Investing at BlackRock, thank you so much for your time.
Thank you.